All right, it is Wednesday, March 29th. Believe it or not, March is gone, which means Q1 is gone on the calendar year. This is going, I thought it was yesterday that it was in Christmas, or I don't know what's going on. It's moving really fast. We have a great guest today. And, it is a perfect day in Austin, Texas, 68 degrees. And so let me ask our own John Sibley Butler for some music.
I hear your party's jumping and everybody's having a good time. You know what's on my mind. You mind if I get comfortable and kick off my shoes? And while you're pouring me a drink, put on some down home blues.
Woo!
Very
nice, Johnny. John Butler, how are you, sir?
I am doing fine. I like our guest today. As a matter of fact, the last week we've been looking at in Austin how to create more capital formation as we grow. You know that we created the Austin network and the Austin Miracle, almost like angel networks and wealthy people. Most of the venture capital is still in California, but the venture capital that is in Texas tends to be in Texas because of our ecosystem. So what we're trying to do now, we have a group, we're looking at how can we create the analog of the capital formation that we did back in the 70s and 80s when George Kosmetsky got all the wealthy together and brought them together to invest in companies. And of course, connected with all of that is the infrastructure. And I've been looking at all of the infrastructure bills that's coming out of Washington, D.C., and it looks like they want a partnership. They might want to do like we do with colleges and universities, name the expressway after a great person, Andre Carvalho in Austin, Texas. So I've been consumed with that. And at the same time, looking at the energy stuff, it's like we're preparing for something, but we don't know if we can get it done. And then we talk about electric vehicles, and then we say, well, but we really can't run America on just one type of energy. And people are going back and forth between the different kind of cars and the automobiles. They stopped making your dream truck because you hadn't bought 15,000 of them yet. So it's interesting times to be here. And then we got the political stuff that's going on. But I'm working hard and trying to help other states out also. And the economy, of course, it's just the economy. With the uncertainty there, with quote the free money that went during the pandemic, and what's the impact of all the flow of trillions of dollars that entered the system, which of course helps to make prices go up, and now we want to drive it back all of a sudden, right, to 2% growth rate, and so it's an interesting times going on.
Yeah. Very much so. Llewellyn King, how are you, sir?
I'm very well, thank you, and I hope you are too. The world is evolving, things are changing, maybe the largest changes we've seen since the end of the Second World War. You have the old liberal democracies all in some kind of trouble, not as democratic as they were, and some edging out of democracy altogether. But the large event, in my view, is the Russian-Chinese lash up, a new power bloc, very influential, where Russia is clearly the junior partner in it, and how long it will last, we do not know. Meanwhile, the world is bracing for what is going to happen with Taiwan, which is not an inconsiderable small island. It has a lot of population. The population is larger than it is in many sovereign countries. So that if China invades, which it will at some time, we have a rather disturbing prospect of a giant war. My guess is that in most capitals of the world, people are quietly thinking about how can we let it happen without too much embarrassment to ourselves. In short, how can we throw Taiwan under the bus to avoid a global conflagration? it is a tough moment. It is not helped by pacifists in the US who want us not to support the struggle in Ukraine against Russia, which is a kind of litmus test for the resolve of free countries faced with the onslaught of dictatorships. So these things are eventually going to perk down into our own economy, into our own thinking, and into our own politics. However, I shall be in Austin, Texas next week. The scales will fall from my eyes, and I will see everything the same way as John Sibley Butler sees it, coming up dollars.
Well, Llewellyn, congratulations and welcome to the great state of Texas when you get here. And I just ask one thing, please have your cell phone on. So when we get ready to go to dinner, I can text you and I will know exactly where you are. So you must learn to text when you come to the great state of Texas, so I can take you out.
That would depend, dear boy, on whether I'd got lucky or not, wouldn't it?
On that note, let's continue.
So anyway, so good, interesting perspectives, gentlemen. So we have a great guest today, and before I get there, let me just remind the audience that this program really focuses on digital transformations and the 3 Ds, as we call them: digitalization, decentralization, and decarbonization. And always highly interested in learning what's going on in the world of digital transformations. And I think that Al Berkeley is in the midst of a lot of that stuff. So Al, how are you, sir?
I'm here and delighted to be with you. Thank you for having me.
Fascinating, fascinating. Well, for those of you that don't know Al is a superstar. Glad to know him, glad to have him as an advisor to the Texas State Cedar Center. And he runs Princeton Capital Management as chairman. And he's also on the board of XBRL US. Prior to his current functions, he had been on the board of directors of the World Economic Forum USA, on XBRA International, on Edgar Online. He was a trustee for the Johns Hopkins University. He was also on the board of directors of WebEx prior to the Cisco days. He was also president and vice chairman of NASDAQ. He was a governor of NASD. And he got all that done because he spent a lot of time as an investment banker. He was managing director of Alex Brown and Sons. And he also had run a few software companies that did fairly well. He was president of Rabbit Software. And then we also need to credit him for his service. He was is a retired major from the Air Force. And he has a BA in English from the University of Virginia and an MBA for the Wharton School of Business at the University of Pennsylvania. Welcome, Al.
Thank you for having me. I don't recognize all that introduction.
It's quite all right. It's quite all right, Al. So Al, you go to Davos. You are not too long ago. You were there, and you are doing stuff with the United Nations. Give us a little bit about Princeton Capital Management, and then tell us what other things you're doing as it relates to digital transformation and where you see things heading.
I'd be glad to. Princeton Capital Management is a registered investment advisor with the SEC, and we offer our services to families and institutions that are interested in our pursuit of growth companies. We're mainly a growth house. We've got some specialty platforms that we create, but basically think of us as the place to look for growth stocks.
Okay.
What I've been working on that you mentioned was this United Nations effort to have these sustainable development goals really work out between now and 2030. We're about halfway into the period between 2015 and 2030. So we've got a little bit of time left to make some very high-minded, very ambitious goals. There's 17 sets of goals. Think of clean air, clean water. Think of racial equity, think of gender equity, think of geographic equity, think of all the equities that we need in this world with 8 billion people. So that's been interesting. The original goals, the millennial development goals that Kofi Annan put forward in 2000 fell flat on their face and didn't work at all. A man named Michael Moeller was #2 in the United Nations in Geneva and called together about 30 people from around the world and said, how do we screw this up so badly and what should we do? They recognized that these goals are too important to ignore, so they relaunched the Sustainable Development Goals with a couple of differences from before. One of the differences is they didn't bother to get presidents. We'd had Bill Clinton sign for us in 2000. We didn't bother to get presidents and prime ministers to sign. This time we're getting governors and county officials and city officials who actually fill potholes and get work done, as opposed to have obligations to talk all the time to the external market all the time. So things are starting to happen. Before the pandemic, I was lucky enough to go with a couple of other people down to the United Arab Emirates and encourage them to put some money up to help get behind the parts of the Sustainable Development Goals that are less popular. One of the goals relates to clean water, and everybody's delighted to talk about clean water, but when I bring up to people that part of that problem is wastewater, there are fewer people that are interested. So we're looking for ways to identify the SDGs that are not getting worked on and to bring some capital against them. In November of this year, during the pandemic, I stopped traveling, did not go back to the UAE, but my partners, one fellow from Switzerland, another from Ireland, kept going down and encouraged formation of a fund. In November, that fund was announced. It's a $17 billion endeavor. That means there's $1 billion for each of the 17 Sustainable Development Goals. So I've been nominating interesting nonprofits, interesting for-profits, interesting technology companies to get some of that money. And I'm very encouraged to see that we may actually get something significant done. I've been mainly focused on the Sustainable Development Goal number 3, which is about health and wellness, but there are others that I've sent the nominations in and they'll get considered in due time.
Great. Gentlemen?
Yeah, Al, how you doing? Congratulations on what you are trying to do. I'm raising a fund. As a matter of fact, I'm raising 2 funds. And my question is, I've always understood opportunity, but I always have issues with equity. That is, I think that I can guarantee an opportunity, say an equal opportunity, but I cannot guarantee outcomes. So one of the interesting things I want to ask you about is, are my perceptions correct? For example, both Elvin Hayes and I, the great basketball player, we both finished school at the same time. He went on to play in the NBA, but I did not have the talent to do that. So when I hear the term equity, I get a little concerned about agency. And when we study entrepreneurship, we know that agency, or what individuals would do for themselves, that is, entrepreneurship is not something that can be managed. If you look at entrepreneurship in America, for example, the foreign bond are 3 times or 4 times as likely to be self-employed than the native bond because of how we educate our kids. So my question is, I think that we can guarantee equality or opportunity, but I do not think we can guarantee equity. We cannot guarantee outcomes. How do you think about that as you create your funds and as you also choose the companies that you want to fund?
Well, it's very interesting because I agree with you that you cannot guarantee equity, but you can certainly open up the doors for more equitable achievement. And I think it all starts with education. I think we are penalized in the United States by having all these school boards all over the country, each competing for political re-election in almost every case, and looking for short-term solutions to education challenges. So starting with the workforce issues, which I actually did a lot of work on for President Bush and President Obama when I was running the National Infrastructure Advisory Council for the President. The workforce issues are at the heart of all these problems we have and are rarely addressed because they're just so huge and so complicated, and we've got such a complicated trade-off between centralized knowledge and proving things and decentralized politics. It's very difficult. That being said, I'm reminded that when I was at NASDAQ years ago, Congresswoman Eddie Bernice Johnson asked me to address the Congressional Black Caucus. And I was the second speaker, and the speaker before me talked about equity as fairness. And I got up and I said, I don't want to talk about equity as fairness. I want to talk about equity as ownership. And I think the fact that word has multiple meanings is important. We've got to get ownership of the production of the productive mechanisms of the economy into broadly into a lot of people's hands. We've come a long way since the Depression, when after the Depression, 4% of American households. We've passed bills that allowed retirement plans to go away from being essentially all bonds in the before World War II to having equity investments in pension funds, and that's brought equity opportunity to many, many households. There's still a lot to be done. So I happen to be working with a man now who's from Kenya, and you know, he's smart as he can be, and he's doing work in the medical universe, looking for new ways to. He's actually found a new way to detect non-small cell lung cancer using the metabolites, the waste product of molecular work, with high sensitivity and high specificity to identify first lung cancer, but also in the early work 5 or 6 other cancers. So he happens to be a Black man. I happen to think he's brilliant, and I've spent a lot of time and put some money to work with him. So I think it has to happen on the individual level. I think we desperately need to get to a meritocracy, and we need to recognize merit. One of the reasons I went on the board of a small documentary publishing company was to be able to use video to amplify the voice of some of the people that I thought had a message that needed to be amplified. We've got to find ways to get these stories across, because Americans will listen only to what they already believe unless you show them in compelling ways that there are other people out there, and the other ways might be better than what they think they've got.
Yeah,
long on this.
Yeah, I think I agree with that. I mean, I'm a Southerner. I think that Booker T. Washington had the answer, and we went away from Booker T. Washington. I think that Tuskegee was doing technology transfer, which is a private Black school in Alabama, long before Stanford, and long before right with MIT. And this is why Booker T. Washington and his scientists are already now in the Ford Museum, because Booker T. Washington, Tuskegee did all the paint with George Washington Carver. So one of the things that's happened, I think, and I have a book on entrepreneurship and self-help among Black Americans, which traces Black wealth back to the 1700s, is that when you go away from a model that's dependent on entrepreneurship and agency and move one that goes on to the politics and voting, I think you get in trouble. I think that was Martin's, my fraternity brother, my frat brother, Martin Luther King's problem. That is, he had no economic agenda when you begin to talk about that. So my question is, how do we get back and talk about those things that have already worked? I like to say in my tribe, we don't have a problem with education. I'm a 4th generation college graduate. No problem, a Southerner, and most Black Southerners are 4th generation. So there's a lot of things that have worked. How do we get back to those things, how it worked, and get back to agency? I'm not quite sure of, I also had a president's appointment from President Bush W. I ran the Fulbrights for President Bush. How do we get back to agency as we create these funds, as we create the different kinds of a platform for people to be successful? Because I happen to think that the issue, and I might be wrong, is how we look at ourselves and how do we look at the models that's been put forward. So when we look at Austin, Texas, we like to celebrate all of the entrepreneurs. We say that our heroes are entrepreneurs. Our heroes are not the politicians. They support what we do. So do you think there's a room for agency when we talk about entrepreneurship and changing the country and starting? I wouldn't say at the grassroots level. I would say that those people who are entrepreneurs, who create jobs, who create wealth, when I hear that Washington create jobs, it just fringes me, unless I work for the federal government. So how do you think about getting back to agency, what people actually do, and turning back to entrepreneurship, especially if you don't have the educational process?
Well, I think you've got a real problem if you don't have education, but as you pointed out, a lot of educated people. I think we have to amplify their stories. one of the reasons I was delighted to be asked to go on the board of Maryland Public Television's foundation is that you can influence the stories that are being told. And my way of doing that is to say, let's dramatically increase the endowment of the Public TV Foundation to have capital to work with to tell these stories that need to be told. So I want to just beat on the drum of getting things on video, getting them on YouTube, getting them listened to, and making these courses available, and also the messages available on success. Let me tell you a little bit about MIT's approach. When Chuck Vest was still alive and running MIT, we had long conversations about whether he should put MIT's courses up online for free. He did it. It took a lot of political courage and a lot of courage on the part of his board. Do you know how many people are attending MIT for free every day, every year around the world? 3 million people are taking MIT courses today. Made that available. Now, it's not an MIT degree. If you want to get an MIT degree, you still need to go to MIT. But I don't care about the degree. I care about what my employee actually knows. So I think there's a message in your question that we need to find the successes. We need to find the meritocracy that created the success, and we need to amplify the voice and get it out there.
Thank you.
Llewellyn.
Good stuff.
I'd like to associate myself with what John Sibley Butler said. I do that because it makes him feel warm and fuzzy all over. Actually, I agree with opportunity. I think that it's awfully important. Equality is hard to produce. Opportunity is where it begins. I also would like to salute Alf for your emphasis on education, except education gets sidetracked into credentialism very fast, where people are rushing around waving credentials at each other, and worse, excluding others because they are not credentialed.
Right.
And that is one of the serious problems of education. I saw it with my father, and to a small extent, I've experienced it myself, where if you're not educationally credentialed, you are at a disadvantage. What I think we need to do is to have an educational system that emphasizes the possibility that every individual has. We mentioned this on this program before, where you see a lot of entrepreneurs at the street level. They may be shining shoes, washing cars. They are entrepreneurial, but they don't have any expectation that they can take it to a different level of entrepreneurism and triumph. And they don't have any idea about the basic mechanics of setting up a business, as we used to say, where I grew up, going on your own. The other force that you've got to deal with here is the idea that everything has to be swept into a larger corporation, that all entrepreneurism has a destiny, which is to be part of something large, some big behemoth that eats you alive for money. I think we need more individual entrepreneurs, more state-of-the-art companies that do what they do. I was doing a television program a couple of weeks ago with somebody from the German Marshall Fund, and I asked what was the basis of the German miracle. And he said he thought it was that you had in Germany companies that built the same thing over and over, had always done it to a state of enormous excellence. And they didn't try to do anything else. And I grew up in a culture which was somewhat like that. At one time I lived in England, and there were 4 butchers. There was a chicken butcher, a pork butcher, a beef butcher, and one who handled sausages. And they didn't try to compete with each other. They were happy to let each other specialize. And of course, you got the best meats from each one of them, because there was competition, but it was competition between what kind of meat you would put on the table on Sunday, not between the cost of a lamb chop. We somehow have lost sight of simple daily entrepreneurship and giving it a break, where you can have corporations, companies, family-owned, where people are satisfied with the superior situation of owning your own company, making a bit more money. I used to always find it interesting when in New York City to take the back road out to the airport, to LaGuardia or Kennedy, when you went through Queens and you saw all these little shops. I wondered who ran them, what they did, etc. Increasingly, they are pushed out by large chains, and it doesn't work so well. I saw when I lived in Virginia, 35 hardware stores pushed out by Home Depot. Now, they may be a little cheaper, but is that an advantage large enough to remove the incredible dignity that you have when you own your own business? The sense of self-worth that goes with that. Is it worth it so that people can get a bucket of bolts a bit cheaper? I think not myself.
Well, I think not. Also, I think part of the downstream consequences of that is this problem we're having with China now. With the jobs that have moved to China, that's not a good situation for us. But we need to compete on the basis of offering better jobs, not just penalizing them for doing a good job in China.
Yeah.
Yeah.
So let
Go
me frame a few things, Johnny. So Al, we seem to be in this, you know, I don't know, paradoxical times. You know, oil is at an all-time high on average. You know, inflation is super high. Productivity is at the highest level possible. Elon Musk is taking us to Mars. We're landing rockets backwards. Amazon seems to have no end in sight on how fast it's going to grow. You know, the internet is taking us to places we never thought possible. You know, cryptocurrency is here. FTX is, you know, kind of throwing a backwards in the party. Silicon Valley Bank is in trouble. What do you make out of all this? Why is the world so complicated now versus 10 years ago, 20 years ago?
I think there's a very clear answer to that. And I think we've not learned as a country or as a species how to deal with instantaneous, zero marginal cost, immediate, uncensored, uncurated communications.
Mm-hmm.
You're getting all these bad vibes because we're amplifying bad news.
Right.
Yeah, I agree. That's a good analysis. The networks that we are constantly, and they're, you know, with the revolution that we have now in the communication, everybody knows things very, very instantly, but also through the noise. And also, let's go back to the small shops. You know, there's almost a rhythm with market economies. So let us take restaurants, for example. I live in Austin, Texas. I have people coming in all the time. They say, John, I want to take me to a restaurant that's authentic. I'm not interested in going to the chains. Take me to a restaurant that's authentic. So Llewellyn has a great concept. Even here near the University of Texas, we have a music store that sells only cassettes. They sell records. They sell vinyl records. Because as the generations move around, there are certain things they cannot see, and new markets are then created. My favorite one is my student from China who came in and said she had a new discovery that she could keep her calendar with paper and pencil rather than electronically. So I think there's something about the movement of market economies where niches are created. And maybe people don't want to go. We have a great hardware store here where people love to go. It's family owned, but that certainly can be a challenge. But the other thing is the networking and the movement of information. Now, usually the movement of information traditionally has been around, you know, business enterprises. But now we know that, that Twitter or whatever can start a revolution. We know that all of these things are very, very explosive. So we can use these things in different kind of ways. But what about when we use them for market economies? If we have a generation, I think we do, even in my MBA classes last year, I had to spend 2 weeks on market economies. I used Conscious Capitalism by the founder of Whole Foods, John Mackey. So I had to defend the market economies in my entrepreneurship class and innovation classes, right? So I think that we do have something that's going on here, and it's sort of in a cycle. I wouldn't call it a business cycle. I would call it an intellectual cycle. And I think that the question is, in America, for the kids who are now in a certain kind of formative age, will they accept what America has done, or would they reject it as they grow older? So I think that Al, you hit it right on the head. the idea of all of the networking is so fast now. We really have to be very, very savvy about what to accept and what not to accept in these networks. And that goes for entrepreneurship, that goes for gangs, that goes for crime, because everything is a network.
I agree with that. And I think, the challenge from my point of view, having worked in government part-time for a few years, is that we've got active enemies that are trying to prove that democracy doesn't work. And we're combination of that is saying capitalism doesn't work. So democracy and capitalism work really well in models of plenty. When you can come to a new land and the boreal forests go forever and minerals can be ripped out of the earth and the sea is full of fish, and all the plenty that we've enjoyed for the last 200, 300 years makes a democracy work. We don't have any scarcity at all. Once you start having scarcity, and maybe it comes on a world basis or a local basis, you get people taking a very different attitude towards each other. So we've got to learn how to deal with a more complicated world, not just because the communications are complicated, but because the supply and demand of necessary is complicated.
You're right. In Schumpeter's work, Capitalism, Socialism, and Democracy, the great economist, my favorite, by the way, economist, sociologist, his book, Capitalism, Socialism, and Democracy, he tried to answer some of these questions. And to him, questions were more important than answers. And as the economy goes along and things change, he came to the conclusion that maybe capitalism itself would destroy itself if not managed in right kind of ways. And one of the things that he talked about was the evolution of the great economists who looked into the future and told us bad stories and would take all of our take all of our energies away. So Schumpeter's book is very, very interesting. Capitalism, Socialism, and Democracy by Joseph Schumpeter. So, economy is about telling stories, what works, but we have to discover again what works. When we started with Kosmeski, the Austin miracle, we had to go back and say, okay, Ford was not, he was an entrepreneur, okay? He was not somebody who beat you up. Rockefeller was not a robber baron, he was an entrepreneur. Yep. If you go back and look at the earliest, it's all about Ford is a robber baron. Everybody, Rockefeller, the robber baron. So we had to do all of that, and thank God for Harvard.
Oh, Johnny, you're muted. You're muted.
I'm here. Yeah. So Al, I think intellectually and how the movement of information is, we have to really, really concentrate on. I would say go back to when I was in high school, we had capitalism versus communism. I don't know if you're old enough to remember that, but I had that every week in high school. Yeah.
Al, I want to focus on something real quick that I think is really important, and it's probably going to frame a lot of where we are. But give us a few minutes on the journey of NASDAQ and how NASDAQ changed, in my opinion, the building blocks of digitalization in the world that we're in now. And as we focus on digital infrastructure changes here, we're looking at how fintech kind of led the way, and then all the other industries have been in a journey, and some are still not even there. But take us back to NASDAQ versus New York Stock Exchange, and everything being online, and how did that come about? How did that happen?
Well, NASDAQ came about as a way to discipline and control the over-the-counter market. The market which was exchange. And interestingly enough, I had a long conversation while I was at NASDAQ with some regulators from the European Union. And they were wagging their fingers at me because some company we'd brought public had gone bankrupt. And they thought that was just a terrible thing. And I said, well, it depends on who you want making the decision about whether to invest or not. We think that we need to protect the ability of the entrepreneur to come to market when they need capital for their business, not to protect the reputation of NASDAQ as a place where nothing ever failed. One of the ways that the traditional exchanges, including the New York Stock Exchange, tried to fend off regulation was to say they had high standards for companies on the market. That was true. They were pretty high standards, but but they had to get higher every year as communications and transparency came into expectations of investors. All that being said, NASDAQ was perfectly willing to take a biotech company with no profits and in some cases no revenues public and let the investor decide that was the bet they wanted to take, not let market gatekeepers say, oh, you can't buy this biotech company because it might be too risky for you. Who the hell am I to know who's got the ability to take risk and who doesn't? So it's where the locus of risk taking occurs and the attitude of the business about fending off regulation. We just embraced entrepreneurialism. We embraced failure as long as it was honest failure. I'm not talking about fraudulent failure. I'm talking about, trying to bring a product to market and having the market not buy the product, but the product's an honest product. So
Right.
things are terribly important to America and set America up for growth from World War II to right now with better access to capital than almost any nation in the world.
All right, let me answer that too. Without NASDAQ, there would be no wealth. There would be no Austin, Texas. Without NASDAQ, there would be no Silicon Valley. And every country tried to create the analog of NASDAQ. So England has their own NASDAQ. Israel has its own NASDAQ, around the world. So when you put the formula together, you have to have a place where as Al said, the traditional metrics are not used. So how do you take a company that has no revenue? Well, you take it on NASDAQ. And the great thing about America is that this creativity allowed university kids, such as the kid who dropped out of Harvard, Gates, to create a company. The kid who who was 19, Micah, from Dell, to create a company. And without NASDAQ, they would have been taken on the traditional New York Stock Exchange. So I want to thank Al for doing that. And as I said before, copying NASDAQ has been copied around the world. Every other country has a stock exchange like NASDAQ. And this is the
You're nice to give me credit, but Gordon Mack, one of the guys that actually brought home the acceptance of the ability to bring these companies public. They prevailed over the critics. I inherited a cushy seat because of the hard work Gordon Macklin and Joe Hardiman had done ahead of me.
Well, thanks for taking care of the cushy seat, and I hope you drank a lot of wine and whiskey while you were sitting there. Because without NASDAQ, there would be no Microsoft. Without NASDAQ, there would be no Apple. There would be no Dell. There would be no Glowfish without NASDAQ. So my point is that, thank you for that. And this is how creativity in the capital markets has got to take place. So for example, if you look at what's going on in America, we have to turn to the wealthy sometimes and say, look, you've got to reinvest in your own community. You have to reinvest in companies in your own community. And nobody did it better than Silicon Valley and Boston and Austin. So one of the tragic statistics, Al, is that 98% of all great companies that scale in America started in 3 places. 128 in Boston, Silicon Valley, and the Austin, Texas region. Because everything from Southwest Airlines to Dell Computers, you just go on and on and on. And so when we think about looking at the future, we must have capital formation. And we can't be like some countries where the wealthy do not invest. One of the great things about our ecosystem in Austin is, we'll put you in the paper. A friend just sold his for $14 billion. I called him and said, look, it's time for you to reinvest in other companies and bring them along, because banks cannot do it. And the Silicon Valley
banks are not in a position to take equity risk. They're limited.
That's right, and they should not. So we need the wealthy to reinvest in their communities. If we could get America to do what Silicon Valley did, right, and Boston did, if we can get the different regions, whether it's the southern region or the northern region, this is how we're going to recreate Cleveland, Ohio, and Chicago. It's going to be that kind of thing. Thank you, but that's one of my passions, as you can see. That's one of my passions. Llewellyn, am I doing all right? I'm kind of afraid with my speaking these days.
Very loquacious, my lord, very loquacious. I have 2 questions, one of which is a small one, and that is underneath NASDAQ. What is the role of crowdfunding for small entrepreneurs. But the larger issue, I think we should get back to your work with the United Nations and with clean water and clean air. I was at the ARENA conference in Abu Dhabi, and there was a lot of lofty talk on the podium and a lot of despair on the floor. It wasn't going to happen. Nobody really believed that we managed the 1.5%, 1.5 degree increase in ambient temperatures, that it would be done. And yet we had these great speeches. I mean, in the end, it turned out to be everybody trying to find out who would get funding, where the money would come from to do this, that, and the other thing. The countries that come from, say, Equatorial Africa, but not only that, who have forests, want to know who will pay them not to cut them down, and on and on and on. And I came away thinking, well, this is very interesting. And we're doing this in the Emirates, and the Emirates are huge, for they're investing enormously in the future production of oil and gas, while paying some attention to renewables. So those are two very different subjects there, but I'd like to have your views on both of those. Thank you.
You got me thinking deep into the second one. Remind me what the first one was.
The first one was, what's the role of crowdfunding for entrepreneurs?
I think crowdfunding is important for entrepreneurs because the venture capital industry has sort of moved upstream as more larger scale deals have become available to them. And there seems to be a gap between nothing and what the venture world will deal with. So I like the idea of crowdfunding as long as the transparency is there and the honesty is there in the presentation of opportunity.
Right.
Go ahead, John.
Yeah, Louis, you're right. Llewellyn, crowdfunding is the old rotating credit system. And we will look at funding of companies, because we like to say family and friends, or family, friends, and fools, like we like to say, who would invest in the company. So crowdfunding is the same before the internet. When my father would get the boys together and say, Abel wants to start a new grocery store, we all gonna throw in $1,000. There's 100 of us, so now you have $100,000. So you give it to Abel, and then Abel would pay everybody back. Crowdfunding is good. You know, we had a general rule that said the less investors you have, the better. I can't imagine preparing the paperwork for 300,000 for 300,000 people who jump on the internet and put in, $100. But crowdfunding.
I think the opportunity, you prove the point by saying that only digitization, only automation will allow that, and we have it, and it's allowed.
Right, you have to roll with it.
An insuperable problem, but let's get back to clean water, clean air, and the future of humanity.
Well, it's interesting. I had dinner with Mafalda Duarte, who runs the World Bank Climate Fund, last week, and she is smart as they come and very savvy about all the people who would like to use her money for projects that won't work. And so I think I'm pleased to have somebody like her as a gatekeeper for these big funds that are sitting there at the World Bank level or the UN level. That being said, I think we touched on it a minute ago. We've got to wake the world up. The messaging's got to be there that these temperatures matter. We're seeing a bit of it with the storms that we're seeing. We've still got deniers, but we've got to keep that drumbeat up that this matters, it's real, and we have the ability to control it within ourselves. Whether we have the political backbone to undertake the costs before it's too late is an open question. And it scares me to death that the statesmanship that we need doesn't seem to be there.
Thank you.
Al, tell me real quick, a bit of fire chat questions. So give me your point of view on FTX. Is that just a pure bad actors and blockchain and the cryptocurrencies are going to continue to emerge as the right thing to do? You're a technology guy, godfather of many things, including XBRL. So what's your take on FTX and cryptocurrency's future?
Well, the evidence appears to be that this young man is actually a crook.
Mm-hmm.
I think you'd call a crook. But I think the fundamental problem is much bigger than that. I think the fundamental problem is that cryptocurrencies are a tool for speculation, not investment. They're not stores of value. And we're wrong to think they're stores of value and to think that buying them is anything more than going to a movie or going to a ball game or going to any other kind of entertainment where you're going to speculate in the market for a while. The idea that cryptocurrencies are a store of value is beguiling to people because they don't understand that there's no there. These are just moments of trust. I'm very much against, I've not played in the crypto area myself. I think it's set up for disaster. I have good friends who've made fortunes in the crypto area, and they don't think of it as investing either. They know that they've got to get out because they're looking not to the supply of goods and services that a product can deliver or a company can deliver. They're looking to the supply and supply and demand for other speculators.
Right.
Not investing.
Okay, another quick question. So, your thoughts on Silicon Valley Bank and Signature Bank and Credit Suisse? How is this possible? Just purely bad investments? I mean, how those guys missed the boat on that?
Well, I'm not sure I know all the details and facts. I do know some of the people who I think are fine, sensible people, but I think the leadership there was taking too much chance and not looking at some of the risk that comes from market to market.
Yeah.
To market disaster.
Mm-hmm. What's your take, Al? FinTech continues to evolve dramatically. You got PayPal, Venmo, micropayments. The internet is making micro lending, micro mortgages, fractional this, fractional that of ownership. But do you see an end in sight? I mean, the Uberization, the gig economy applied to FinTech, seems like everybody's going to have an opportunity to be an owner. Do you see that?
Yeah, I understand that. I think that the real issues in FinTech are who bears the risk, who has accountable risk. And that's why you have intermediaries that evolve. Let's think about trading stock. When somebody rode into New York on horseback from upper New York with the stocks in their saddlebags and they looked for somebody to buy it. An intermediary arose and evolved because that other side wasn't always there. So the intermediary didn't want to deal with another intermediary's end customer because they didn't know them. So they deal with another intermediary. We were always paired up, two end customers were always paired up with two intermediaries who stood to deliver to each other because they were going to meet each other again. They had a relationship, not a transaction. So when I look at the FinTech world, I say, where is the relationship versus where is the transaction? Where is the risk versus where is the reward? We are able to see a lot of electronic money movement instituted by individuals because those intermediaries and those intermediary institutions are there to back them up.
Mm-hmm.
Al, I think that I have the solution to America, and I want you to see what you think about it. Now my colleague here had the solution because he was going to buy a truck. My solution is this: I am raising a fund for the first time for equity investment in mom and pop shops. I'm going to say that again. I could go to Washington, D.C. right now and get $100 million and put everything in debt. Mom and pop shops who's been in business for 10, 15 years, where you actually live on the business enterprise, have always had to go to banks and go and borrow it, and then of course have collateral. Because it's the same reason why Willie Nelson did farm aids. So what we're doing, we're creating a fund for mom and pop shops, and we're going to create what we've done in technology for the average business in America. So let us say that you have a small, you got a marketing firm, you got 3 people working, you got 2 computers and 1 man, and you say, if I just had $1 more million, I can take my business from 1.5 million in revenue to 6 million. Here's the $1 million going forward. We're going to take 20% of the revenue going forward. And by the way, I was also raised in a small business. If you want to buy the equity back, you can. I think this is revolutionary. I'm working with a guy named Mike Dewey to do this. It is revolutionary. So what do you think about providing equity for the regular enterprises in America?
That's an interesting point. I think there's an analogy to providing college tuition to a student in return for a percentage of their income going forward, rather than treating it as debt.
Well, yeah, I always said Charlie Moscas went before Congress, and I did too. I'm a Vietnam veteran, decorated. And I always thought that it was crazy to just have student loans. I thought you should go in the military 2 years. You should work in a hospital for 3 years. You should work in an old folks home. You should do something for the country. So we went and argued that. And in the book, All That We Could Be, in the last chapter, Charles Moscas was a great professor from Northwestern University and we wrote a book together. I've always said, as a veteran, now we have a GI Bill with no veteran. And
Yeah, that's interesting.
that just burned my butt up. The fact now a savvy person like me, I've got a kid, I'll say, okay, I'm gonna send you to college, but hey, go get that money for 2% on the student loan. I'm invested and get 8%. So when you finish college, that's what happened in a lot of ways, you know. So I think that we can get back to that by just saying, look, you don't have to go, but you got to do something for the country. You just don't give out student. We knew this was going to be a disaster. And Charles Moscas, M-O-S-K-O-S, bless his heart, he's going to glory now, predicted it. And we called it a service to country before you just give out student loans.
Yeah, well, I agree with you. I'm an ROTC graduate from Virginia, went in the Air Force and loved it, and had a great experience from 68 to 72, and then stayed in the reserves for a while. I think public service, the universal public service, is an answer to a lot of problems, and we should do it immediately. If I were in charge, we would do it immediately. But I think the question you've asked about funding small businesses that are likely to stay relatively small compared to other things.
Yes.
A very special pool of capital that has social goals in mind, in addition to raw financial goals.
Well, I will email you about it and we'll talk about it.
Okay, that'd be fine.
Al, tell us real quick, I'm looking at the time here. I want to give you some chance to talk about some other things. Tell me what's ahead of you the next 6 months. You, Princeton Capital, well, what's going on the next 6 months? What's keeping you up at night?
Well, I feel I'm very much on the optimistic side of what we're doing, so I'm not sure I'm staying up at night over the things that you really want me to talk about. At Princeton Capital Management, we continue to try to do what we can for our families who are entrusting us with their capital. We're looking for growth stock for them typically. A new fund that we did all the work on before Silicon Valley Bank failed. It's a acquisition fund for community banks. Just timing happens to be right on the problem of Silicon Valley and others. So we'll get that product launched in all likelihood. I continue to work on some standardization efforts from extensible business reporting language. XBRO was set up as a nonprofit to help the SEC make the records in the Edgar database, which all public companies and mutual funds have to file into, to make those machine readable. And we're big believers in standardization. We're working on standardizing some of the renewable energy transactions and understanding the definition of those words that each different solar installer or each different wind farm person has their own definitions for.
Sure.
Standardization is a magic thing. If you had to buy a different plug and put a different plug in the wall for every appliance you bought, you'd understand how complicated we made our language. And by not having standardized languages, the United States is behind almost every other democracy in terms of getting standardized vocabulary for government reporting. So with that esoteric, put you to sleep subject, I've got a bunch of things scheduled coming up in the next 6 months. XBRL US and Campbell Pratt, who runs it, is just doing a great job.
Mm-hmm. And can you say real quick, for the audience, your understanding and excitement about what we're doing at Texas State with Cedar?
Well, I think the idea of having a place that's large enough to model at scale what the country needs in various elements of the right smart city is just a staggering opportunity. Where else can you get that done except in those rolling Texas plains? I think what you're onto is just magical. There's a chance here to accelerate the automation that we need by decades because you're not fighting over rights of way under city streets in Manhattan.
Mm-hmm. That's right. That's right. Gentlemen, parting thoughts?
I think what you're doing in your thought process, but more important, your vision and how you think about America is very, very important. I think that business, enterprise, and great things have always followed great thought processes. I'm happy to have had a conversation with you and keep it up. And I think that we'll do great things for America in the future, because there will be a new America. We just have to make sure that our culture is part of it.
And we've got to tell people what it's going to look like in 2050, racially, economically, et cetera, because we've got big changes coming, and we've got to, the only way we'll make that happen peacefully is to have education about it.
I'd like to say, Al, I think your thinking is awesome and really exciting to talk to you, very stimulating. I wanted to take a moment to tell you about, on the entrepreneurial front, which I have mentioned before, there's a college in Charleston, South Carolina, which has 4 years of liberal arts, but a trade as well. And the only thing that interests me out of that college is, of the graduates, about a third of them, it's a very small college, it started because there was no skill to repair storm damage in Charleston. About a third of them start their own businesses within 5 years, because they've learned stone cutting or decorative plaster or framing carpentry or fine carpentry or something like that, or blacksmithing, and they have a trade that they can go to and turn into a business. Whereas if you're coming out of a formal university with a degree in socialism, in something societal or journalism, etc., you can't go and start a business with it. You've got to be hired into somebody else's business, and there you're going to be frustrated probably. So I think the importance of teaching trades as well as the intellectual side of education is quite vital. And I think that you might find that very interesting. I'll drop you a note about it if I might.
I'd love to learn about that.
Absolutely.
Al, my final comment to you, we didn't talk about it real quick, but give me your perspective on US versus China, intellectually, business model, next 50 years.
So I think you have to start by saying the Chinese people are just exactly like us. They want the same thing for their families, their children, their posterity. So we need to figure out how to isolate the bad effects of governments, not the bad effects of populations, because net, the populations are good. We need to figure that out. I do think it's a dangerous time. I looked at Jim Stavridis' book on nuclear explosion in 2034 being a real warning sign. He's a brilliant guy. And so I think we've got to handle this properly. We've got to tell the world what we want to accomplish. We've got to look like we care. We've got to look like we're in a win-win situation. They're trying to position us in a win-lose position, and they position themselves in a win-win. We have to move this back to the win-win quadrant.
I think you're exactly right, because American way of war and peace is there are only bad governments, but all people want great prosperity. That is, you get rid of the bad governments. There's nothing wrong with the Germans get rid of the government and then they're fine. Yeah, get rid of the government and they're fine. And I think prosperity and opportunity is what America's always been about.
Yeah, well, hopefully we'll have you again, Al, that we can talk about some of the things that are going on and perhaps see some of the maturity that emerges out of how the UN is going to move forward. And I look forward to visiting with you. We will circle back and ask you to be a keynote speaker at the Digital 360 Summit 2023 in September 26th through the 29th. And I wanted to show everybody real quick our new logo. So that's our new logo for the show. It's going to be at the Texas State University at Star Park in San Marcos, which is where we have our Smart Cities Lab. And it's going to be a fabulous event. And we will have many of these companies come back in 2023. And obviously the work that we're doing at Cedar with the 14 labs and 800 acres focused on these 9 areas And I want to thank Texas State for sponsoring the Digital Roundtable. So with that said, Al, thank you for being here with us today. We will post this and send you a link for your own use. And we're going to ask now our own John Sibley Butler to take us away.
When the evening sun goes down, you will find me hanging around. For the nighttime, it ain't no good time, but it's my time. Many people are just like me, dreaming of what used to be. In the nighttime, the nightlife ain't no good time, but it's my time.
Woo! Well done, well done. I'm going to stop recording now. Thank you very much for being with us today again, Al.